Okay, everybody, it's me, Gregory Mannarino. It is Friday, July 17th, 2020. I just want to say this about yesterday. I was so angry. My last video, my post-market wrap-up, hearing about more calls for increasing the debt, Fed presidents coming out here talking about issuing more debt. This is destroying our country, whatever's left of it, and it really put me off. So, I don't know, I just wanted to get that out there. Let's talk right now about what's happening. Right now, stock futures are higher across the board. Nothing major, higher nonetheless. It looks like we're going to make up for yesterday's tiny loss in this market right at the open. Now, stocks, well, hold that thought for a second. Let's look at a few other assets and maybe we can gauge what will happen with the market today. Just real quick. The 10-year yield is 0.60. Okay, that's kind of where it's been hovering lately, but let's look over at the dollar. The dollar is slightly weaker. Okay, so I would say that's more or less, at least in this environment, neutral. But we'll see what they pull off today. They got to prop up crude oil. You know that. Crude oil right now is under a little bit of pressure. Okay, you got cryptocurrencies catching a bid. You got silver just about flat, gold catching a little bid here. So what's the setup? Right now, I would say the setup is neutral to bullish today. If they manage to prop up crude oil, well, it'll push the market up, and they keep pulling rabbits out of a hat. Whenever things are going wrong, they float out some story. Maybe we're going to hear that the China deal is going well again. I would not be surprised in this twisted environment. Maybe we'll hear about a vaccine, or maybe we'll hear about drugs that are going to save us all. You know what they do. They play this game. It's all this is to prop up the market, to keep people distracted. Now let's talk a little bit more. I don't know how many of you were watching Bloomberg this morning. Now Bloomberg, they had a couple of guests out there talking about the prospect of inflation, explaining, as you and I well know, that the Federal Reserve is being allowed to print epic sums out of thin air, not just being allowed to, but called upon by our elected leaders here to buy it all, to issue more debt, to buy more assets, and they're raising the specter of inflation. Now, the one element that these guests left out this morning was the fact that they have deliberately killed the global economy by design. By doing so, they stop the flow of capital or cash moving through the economy, the money velocity. Once you do that, you can't have inflation. It's impossible. That's exactly how they played the game. The Fed shut down the global economy via this black ops of the coronavirus so they could get in here and finish their final plan. We all know that. It could not be more simple. So there is zero chance of inflation right now. So when you hear commentators on the mainstream, the financial channels mostly are going to talk about, the prospect of coming inflation. Right now, in this environment, there is no chance of mass inflation. Zero. There's no money velocity, but there will be. There will be. When will it occur? Understand that the debt market is a time bomb. It's ticking louder and louder and faster and faster. The more debt they add to the situation, the more they suppress rates. All this does is create a rebound type environment. Suppressing rates. And I believe rates are going to go lower moving forward. There's no doubt about it. This is part of the plan too. Then what will happen is, again, who in their right mind would want to hold a unit of debt here, including a dollar, which is a unit of debt, okay, when the stock market is doing nothing but go straight up? You understand? So there's going to be a massive sell-off in the debt market at one point. Rates are going to spike. They are going to spike uncontrollably. There's just no doubt about it. And that is going to start the movement of capital, a massive tidal wave of capital moving as a sell-off in the debt market causes cash to leave the debt market. That's going to put pressure on the stock market. Cash is going to leave the debt market. It's going to leave the stock market. It's just going to look for places to go. So that's when cash will move. And that is when we're going to get massive inflation. Because again, all of these trillions upon trillions of extra dollars that have been added to a digital screen, printed out of thin air, they're going to start chasing the same amount of goods. This is the one factor that not a single one of our politicians who are all inept, from the president on down, never talk about. Because I guess it's above their pay grade. I don't know, people. Look, like I said, look, I'm already starting to get angry because what's going to happen here? You're going to hear more calls from our elected imbeciles. I'm going to call them elected imbeciles because they're not officials. They're elected imbeciles calling for more debt, begging for more money from the Federal Reserve to be created out of thin air. You're going to get calls for lower rates than what we have right now. A weaker dollar. How does this help you? How does a weaker dollar help you? Unbelievable. But this is the inept imbeciles that are running this country right now. And it's not going to change. Whoever sits in the White House, all of them got to go. I think you know that. Every single one of these things must go. Anyway, this guy right here loves you a lot. Please share the video. We're going to talk later. It's going to be just lovely. I'm just sure about that. See you later.